Today we're going to be looking at absolutely everything to do with indicator and algo trading. We're going to be doing it live on YouTube. So without further ado, let's get straight to it. Hey traders, I hope you're going extremely well. My name is David and welcome back to my channel where I go through profitable trading strategies. Today I thought I'd spend some time with you guys to go through everything that I've learned from A to Z about algo or indicator trading. Hopefully I'll be able to go through any of the questions that you may have about algo trading. I'm going to show you how to add indicators to TradingView all the way up to connecting them to bots. I'm going to show you every last bit of the backtesting panel and how it actually works, how to optimize a trading strategy and get from A to Z literally in algo trading. So if that sounds something interesting to you, maybe why not subscribe? I do videos every Monday, Wednesday and Friday. So without further ado, let's get over to my screen. Let's have a look at what we've got planned for today. Okay, first of all, I've created a very quick slideshow here on Slides, Google Slides, to go through everything that I've learned from the beginning. I've kind of put together a slight plan so we can go through things together today. If there's any questions at any point, please don't hesitate to ask them in the questions below. I will be going back to all of the questions in the comments and I will be answering every single one of them. So to get started today, we're going to be going through algo trading, what algo trading is, how it works, what's included, how we get better set benefits, how we get set up, how we do backtesting and how we optimize trading strategies. Welcome to everybody. This is going to be mainly about algo trading, not only about DaviddTech. I'm going to go through DaviddTech and the website and how to connect things, but the idea is hopefully anybody who wants to work outside of algo trading as well and just do the algo trading part without DaviddTech get some benefits as well. So let's get started, guys. Let's get through over to our plan. Our plan is going to be Botify today. This is the emblem of our community. I've been saying it for quite a long time. It is an acronym for what we do and what I preach on DaviddTech. We're going to be building a strategy, looking at ideas, how I come up with so many trading strategy ideas. Then we're going to go looking at optimizing, how to optimize a trading strategy using the Optimiser, the famous Optimiser from DaviddTech. This tool up here, it's free to use and you can add it to your browser to optimize any trading strategy, whether it's DaviddTech or not. We're then going to be going through the backtester and how to correctly backtest, what I do as backtest and how I make sure that my trading strategies are robust and will work in the long time. We're then going to go through how to incubate, then we're going to fuse our connection to bots and hopefully yield some returns. So as you can see, this is the decision process that we're going to be taking. This is what I always use when setting up my bots on TradingView and hopefully going through and creating a profitable bot. As I said, we have our strategy, we have the optimize, we're going to be optimizing it, we're going to be testing it, we're going to be incubating it. At that point, after incubation, we make a decision whether to run it on live markets and see the yields and the results, or we can destroy it and start over. So first of all, I'm going to go through the first part. What is an actual algo trader? I'm going to swap through slides here and go over to websites. We're going to be looking at TradingView, some other websites as well, so hopefully you'll all get as much as you possibly can out of this short but hopefully information packed presentation. So what is an algo trader? For me, what an algo trader is somebody who uses a rules-based approach to trading. So it doesn't necessarily have to be somebody who uses bots. It doesn't necessarily need to be somebody that uses indicators. It's somebody that has set rules and no matter what, they will take every single trade if that rules-based trading system says that they must take a trade. They also have rules for their stop loss and risk management. They also have rules for the take profit, and all of those good things are all set before actually taking a trade. There's no emotion, there's no judgment, no exterior like sort of friends and family telling them they shouldn't be taking trades or anything like that. You have those rules. If an RSI goes over a certain level, if that's your trading strategy, you're going to be taking that trade. So three words comes to mind when I'm actually algo trading myself. First is automation. Automation is using bots to backtest, forward test and take all of the trades. Now, it doesn't mean that every single algo trading person or beginner is actually using all of those. Some people like to actually just use indicators to make sure they take entries and then manually take those trades. That for me is somebody that is algo trading as well. Algo trading stands for algorithmic trading, guys, if anybody didn't know. Next thing is backtests. Backtests are much easier using algo trading once you have a system in place. They are also much more accurate because obviously when you're backtesting a trading strategy like we did back in the day, like pen and paper or just marking them on the chart, you can kind of put your own sort of bias on those trades, and that backtesting system may have a bias towards you actually winning because you feel like you should emotionally win, and it just doesn't work. When you have an algorithmic backtest, those backtests will take the trades no matter what, and that will be counted in the backtesting system. It will produce statistics like sharp ratios, profit factors, back drawdowns, and all of those kind of things. Another one that comes to mind is indicators. Like I said, this is my personal list. Indicators I always use for my actual trading. It doesn't matter whether it's a breakout of a certain pattern or a moving average or an RSI or whatever it is, I always have indicators that indicate to me that I should be taking a trade. Now you've got to remember that indicators are simply formulas or algorithms that are actually just telling you when to trade and when not to trade. Even that could be something like a candle pattern or something like that, which still for me is still an indicator. I feel as though even candles themselves are indicators because they're just indicating price. So we now have kind of an understanding how I feel what a algo trader is. For me, not everybody has the same opinion, but that is what I feel is a algo trader. Maybe you don't feel that. You may have other things and other rules that you put into place. I'd love to know what you think down in the comments below. Helps me to also expand and helps me to come up and learn from you guys as well. Okay, moving on. Why algo trading? Well, I think that's a great question. Why would you want to go out and learn a new skill when you already kind of maybe could trade discretionally and easily go and execute your trades manually on Bybit or anything like that without actually having to learn how to algo trade? So I've written down a couple of the pros and cons to algo trading. I'm sure there's absolutely tons of them out there that you may have come across when you were looking to start indicator trading, but these are the ones that I've come up with myself. So the pros being that the markets are maybe open 24/7, and with algo trading you could be on the markets 24/7 if you're in crypto, or when markets are open for things like Forex, etc. You can be there monitoring the markets no matter what. You don't have to be in front of a screen 24/7 to be doing that. You could be using bots or algorithms to alert you on a phone or whatever it is to tell you when to take a trade. Whatever it is, you actually don't have to be in front of your screen like somebody who's taking manual trades and looking for harmonic patterns or whatever they are. You don't have to do all that because you don't have to be in front of your screen. All trades are taken in a perfect algo trading system. All trades are taken no matter whether you're asleep, no matter whether you're at the beach with your family. Those trades will all be taken. Now that's also dependent on whether you're using bots as well, because there is a human part to algorithmic trading if you're not using bots to take those entries. But generally, we would take all of those trades. Backtesting and forward testing, like I said earlier, is much easier and much more accurate. Optimization is something that we can do, as when you're doing things discretionally, it's a lot harder to go and change all of those lengths and not being able to backtest and things like that. So optimization, I think, is an absolutely huge thumbs up for algorithmic trading. Although there's lots of fun out there, I guess you could call it, where people are saying, yeah, you're just going to be over optimizing because you're changing all the levels and things like that. I think personally that indicators are put onto a chart and you have to adapt them to the market and to the time frame and things like that you're on. Speed and efficiency, obviously when you're algo trading, if you're using bots as well, you will get a much faster order than actually when you're doing it manually, especially if you have to run back to your computer and take those orders. Elimination of emotional bias. Obviously, as I said earlier, emotion is kind of taken out of a good algo trading system. You can always go and turn bots on and off manually, which obviously is something hard to deal with. It's stressful. Not when you see a bot in drawdown, not stopping yourself from actually turning that bot off is quite hard. So although it's written there is no emotional bias. There is no bias to those actual trades, but you still can turn them off. But I still believe that is emotionally a really good benefit of algo trading. Diversification. I don't think there's any other systems out there that allow you to diversify as well as algo trading. You could be trading 15 trading strategies on different pairs without even looking at a single one of those charts in the day. You could be on different time frames, completely different pairs. You can be on crypto, Forex, or anything else while you're without even having to look at a single chart. Diversification, I think, is a huge plus for algo trading. As I said earlier, less emotion, sometimes less in one part, sometimes more in other parts. Like I said, you can just have your bots on the screen. Pressing that pause button sometimes is very hard not to do. The cons, we've got technical failures. This happens a lot. Unfortunately, things like TradingView and middleman services are very hard to monitor, and technical failures do happen. Over optimization is another thing. Over optimization is a huge problem, whether it's algo trading or not. Over optimization is a big black spot on algo trading. When you're over optimizing your trading strategies, you get a bit into trying to make your trading strategy absolutely perfect. It ends up in real markets completely failing. Now, there are ways around this, as I'll go through in the next couple of slides. But yeah, got to expect that 85% of your strategies will actually fail. Complexity and cost. Cost can be a big one for a lot of newbie traders. If you're going to go out on yourself, by yourself into the wild and actually learn to algo trade and things like that, the costs can mount up. You've got data, you've got things like going and connecting to TradingView. If you're going to be using TradingView, there's obviously a monthly cost for that. Connecting directly to your exchanges, there'll be a cost for that as well. If you're downloading data from elsewhere, costs outside of crypto can be very expensive. So you do have to be careful with that, because obviously you don't want to be spending more than you're earning on your trades. Dependency on data quality. That's also something you need to be good at. You need to be good at cleaning data, something that I've struggled with for a while. Obviously, TradingView does that kind of thing for us, but you still need to be very careful. There's some things like I'll show you a bit later in the further slides. But maybe a trade that got into a trade and out of the trade in the same candle on TradingView will give you a kind of a bias to the upside or the downside of a trading strategy. Stress, like in any trading strategy or trading world, there's a lot of stress in it. Can't get around that, whether it's algo trading or manually trading. A lot of people say that algo trading is less stressful. I kind of think that the stress is just in a different place myself. Like I said, you could be revenge trading because you've lost a load of trades in a row when you're manually trading. In the world of bot trading, you could be turning all of your bots off and adding grid bots because you know that's going to get you loads of entries or something like that, or just removing fees from your bank test because you think it looks better and things like that. Those kind of things can be very stressful. Optimizations that don't work out after putting a lot of time into a trading strategy can be extremely stressful. And as I said, the last one, we have the cost of hardware and software, which I spoke about a bit earlier about for TradingView. So those are the pros and cons. If you'd like to continue joining me after listening to the pros and cons, I'm definitely a pro algo trader. I absolutely love algo trading. It is a huge percentage of my revenue myself comes from algo trading. I don't do any manual trading myself except for spot buying occasionally. but that's just my old demons coming back. But personally, I actually only algo trade myself. Right, so back to the Botify plan. What we're going to be looking at first, we're going to be looking at how we get ideas for trading strategies and building trading strategies together. I won't be building or coding a trading strategy, but I'll show you how my thought process of going through and finding ideas for trading strategies, what I use for programs. As I've said a couple of times here, what software am I using personally? Personally, I like TradingView. I feel as though it's good value for money. There's lots of huge open source community around a TradingView, which is always a great thing when you're getting started. The Prime scripters are a fantastic group in Discord where you can go and learn a lot of stuff about PineScript and TradingView and scripting for TradingView. The price is, there's a couple of packages. There's a free package as well. If you're going to go into algo trading, you won't be able to fully use the free package because it'll be missing some features, but it certainly is a step in the right directions to get you started. Right, let's have a quick look at TradingView. I'm not going to go into big detail because I'm pretty sure that most people that are watching this video knows what TradingView is. So we're going to go over, as you can see, TradingView is a web browser based product, a SaaS if you will. It's a product where we can go and have a look at any TradingView pair or any trading pair. I think it's pretty much got everything in it. It's very, very much user friendly. It's easy to use and easy to find anything on. So we have up here, we have our time frames and our pairs. We can add indicators very quickly. And the thing that I said like earlier is if you go over to community, there is just a humongous amount of free and easy to add and easy to use scripts like this one here that gives you sharp burn Sortino ratios. There's just a really good number of scripts out there. Most of them are open source, so if you go onto one that you like, you can click the source code and have a look at the source code, so you can read the source code and just get really good idea of how the scripts work and learn how to code at the same time. We also have a back tester, which is this thing here, this guy here, which I call our BFF, which is our best friend forever. It's going to be, yeah, it really is a great tool when you look at this in comparison to coding it in Python or something like that. Just so much easier to get it off the ground and get you started as an algo trader. Great community, as I said, behind it. I'll look at the community in a minute. There's not really much else I can say about this program other than it's great. There's a lot of indicators. If you're looking for indicators, you can come here and add some indicators on there very quickly and come up with some strategy ideas. Right, so we've had a look very quickly at TradingView, the product that I've been using. You also have MetaTrader 4, 5 as well. There's NinjaTrader, there's a couple of other ones out there, TradeStation and other ones. If you're more interested in those, I don't really know a lot about them myself. I personally use TradingView. I've used MetaTrader as well, but this is definitely my preferred platform. Obviously, there's pros and cons to the platform as well. You do have to be very careful with some of the code from some of the developers. Not intentionally, I reckon, in most cases, but some of them do give a bias to higher win rates and things like that because of look forward in their code, which is something that we'll talk about a bit later on. So now you have your TradingView account set up and you're ready to go. We're going to look out for our strategies and how I come up with some of my ideas. So there's several types of trading strategies out there, whether you're looking to buy and work on a trend following system which identifies the trading strategy. This is probably where my bread and butter is, or my meat and potatoes, whatever you'd like to say, is mainly most of my trading strategies are trend following strategies. They use a baseline, as I call it, in my trading strategy plan. Baseline is a indicator that gives us our trend direction. Whether price is above it, we're looking for a actual long. When price is below this indicator, we're looking for a short. I then use other indicators to confirm my entries, but they're generally trending that first indicator. It could be a breakout indicator that gives them the actual entry, but we still have our baseline, which makes it technically a trend following system. Arbitrage takes two two different markets or different instruments, and then compares them and tries to find a inefficiency in the market. So for instance, if Bitcoin is actually trending and Ethereum is actually bearish, generally they tend to follow each other. So we might take a short on Bitcoin and a long on Ethereum, and hopefully they will meet up in the middle and you would have had two winning trades. Either way, it could work out that actually Ethereum pumps and you actually make the money on the Ethereum, you make a small loss on Bitcoin, or the other way around, everything dumps and Bitcoin will be your winning trade. We then have market makers trading strategy. This is something that I'd love to dive a bit deeper into. It's a way of providing liquidity to the market by adding your trades in as orders, but it's something that I haven't actually looked at a lot myself. But it's something that I would like to look into. I did look a bit into it last year, but I didn't find anything particularly profitable for a trader of my size, or with the hardware that we have, or something that we're using with TradingView, something like that. It just didn't seem to work out. So yeah, I know a couple of guys that have used quite a few pieces of software and never ever really found anything that was particularly profitable. But that's just, like I said, my personal opinion at the moment. Then we have our final one in these slides, which is mean reversion. Mean reversion is a bit like arbitrage here, as I was explaining earlier, but instead of taking two trades, we take one single trade. Mean reversion, a good example would be using Bollinger Bands. Bollinger Bands uses a moving average and then standard deviation from that moving average. Standard deviation is calculated from the actual moving average. When price breaks below when price breaks below the lower Bollinger Band, we're expecting it to revert back to the mean, so the middle line, and hopefully that's where we're going to take our profit. So that's the trading strategies that I'm actually looking at the moment, trying to add to my portfolio for a bit better diversification. Like I said, I have quite a few trend following strategies. So I'm looking to diversify personally myself by adding these other kind of strategies. There's plenty of others, like I said earlier, breakout strategies kind of things, that kind of thing as well, without using the actual trend following system that I put in place. So where did I come up with ideas for trading strategies? It's easy to get lost. There's lots and lots of places, especially places like YouTube. YouTube is full of videos about trading strategies like these ones here, which are very good. There's a lot of fake influencers, if you will, out there giving you bad strategies without even really back testing them. I've done my fair number of back tests on trading strategies from these YouTubers, and 95% of them don't even actually work. That's not to say that they all don't work, and YouTube is a mine of information for finding the trading strategies. And if you're a visual learner, probably like myself, it's a great way to find a strategy very quickly, put it down into code or put it onto something else, and yeah, just finding a strategy and back testing it very, very quickly. Another place that I'll go is describe.google.com, which is this website here, which is another mine of information, and I think it's overlooked. I think it's absolutely brilliant. If you go here, you can search on things like breakout strategies, and there's just PDFs and PDFs of information and strategies that have been back tested and not, ideas put out there, old books and new studies, all in one place, full of information. Like this one here, for example, which is using the Donjon channel. You can go here and you can download the PDF file, which explains everything inside of strategy and how it works. There's absolutely tons of great ideas in this website, and like I said, I think it's something that's overlooked. It's getting updated all the time. There's new strategies on here, and it's something that I look at pretty much daily to try and find new trading strategies. Even a lot of AI at the moment, as it's trending, There's a lot of information about AI, and I really do think that it is a trove of information for anybody looking to find new strategies. Next one, this one was suggested to us as a group by Kevin Davey himself, the algo trader. Champion algo trader himself was part of our group and come in and done some speaks. A lovely guy who's got a mine of information himself. He suggested to get these magazines here by the technical analyst of stocks and commodities. Apparently I know there is a load of back tests and ideas and trading ideas from other traders in there. So this could be your way of finding it. I don't think it's particularly expensive to get a subscription to these kind of things and get some of the older magazines as well to go back and have a look at the trading suggestions in there. TradingView Ideas is another wonderful website where the community comes together and builds on ideas about trading. You can go through all of the videos. They're very much more technical TA, but yeah, it is a great way of finding new strategies. A lot of them will be head and shoulders patterns and things like that, but you may stumble across some really good indicators and ideas behind trading strategies, and hopefully they'll be easy to code and put together. The DaviddTech website, I think, is absolutely without a doubt the best place in the world. Of course, I'm only joking, but I really do think that DaviddTech website is a great idea for looking to a place for finding strategies. It's very easy. You can go here and add all of your trading strategies from the DaviddTech website. There you'll find over 100 trading strategies that I have back tested, and you just literally add them to your chart and you're done. Bub's your uncle, you're off to you can go back to bed and not even have to even worry about it. Just joking on the side here, but obviously by adding your trading strategies here, you have the code already done for you. You can also import using the Optimiser, which I did a video about on Wednesday, how to import other people's settings. And I'll go through it very quickly before the end of this video as well. But yeah, you can very easily just click on a strategy, import somebody else's settings, and you'd have an indicator up and running within a couple of seconds. You also get the things like the forward testing and back testing results of all of the trading strategies from the DaviddTech suite, but I'll be going through all of this afterwards. You've also got up here the free indicators section up here, which I'm going to try and improve over the next couple of weeks. This free indicators section here gives you open source indicators with the heartbeat, that I call it, signal included. All the heartbeat does is it just gives you a simple way of creating a signal if you're looking to code the strategies yourself. It gives you a 1 or a -1 if you're looking for longs is 1 or -1 is short. Just makes your life a little bit easier, and I've added that to all of these strategies. So yeah, I think that's probably one of the best resources in the world. I'm only joking, just adding that on. Right, other people's strategies, other people's or your own. The best thing that I can suggest to you is to either use a DaviddTech boilerplate or use your own. Boilerplate has been absolutely the best thing that I have created since the beginning of DaviddTech. We've made some absolutely wonderful tools, including the Optimiser, the forward testing platform, but the boilerplate has been such a wonderful help for me. I'm coding 2 to 3 strategies every day. You get to see around 3 of them every week on YouTube. The rest of them end up in the bin because they don't work. But without the boilerplate, I'll be coding from A to Z, and I wouldn't probably be able to do more than 1 a week. Boilerplate, what it is it's just the frame around all of the trading strategies. Instead of having to code things like take profit levels and things like that, I'm just literally copying and pasting those indicators that I was talking about with the heartbeat included. I'm copying and pasting the heartbeat into a true false statement, and it's just creating a backtest result for me. It really is very powerful. There are limitations, obviously, things that get a bit hard, like when I'm looking to do a mean reversion strategy. It's a little bit outside of the box of the boilerplate, so I have to build a new one, and that's why it's taken me time to come up with other strategies outside of the trend following strategies. A couple of things that we need to look at as well. is the properties bar on TradingView for strategies. If we go over here, we can click on the cog over here. Now this is my boilerplate. These are all of the filters that are included in my boilerplate. If I go down to here, you'll be able to find that there's risk management and so much information in there. It's unbelievable. But when we go here, we got the main settings of the strategy. This is the only part that ever changes inside of my boilerplate. This makes my life a lot easier. It also makes our lives easier for the members because they know where to look for things and how to make things better on optimization. Now if I go over to the properties section here, these are just going to go through some of the things that are important to know about the TradingView properties section. Always include commission, I'll go through that in a minute, and slippage if you can. At least try and find out what slippage is and how to add it. A couple of things down here, I always leave these two turned off because I tend to find that they actually create fake backtesting results. Don't know what your guys' opinion on that is. For me, it just seems like they recalculate and actually create either repainting or fake results. Love to know what you think about these two tick boxes here. Use magnifier if you have it available. Do remember, if you're sharing with other people and they don't have the magnifier on, it will disable it for them and they won't be able to turn it on. And this here is something very, very new. The using standard OHLC helps us to fight things like the candles and things like that. I'll go through that in a minute because it's something that's important when you're backtesting, but I've got a full section about backtesting that I'm going to talk about in a minute. So yeah, I think I've been through all of the points. We have commission and slippage. I have a slippage indicator on all of my newest trading strategies that helps you to calculate slippage. Calculating your commission and adding commission is absolutely a must. If you have a trading strategy that has zero fees or commission, however you want to call it, it will probably look pretty profitable until you add your fees. So always add your fees before. Use bar magnifier where you can. TradingView obviously only has, so this is where I was trying to explain what the bar magnifier actually does. The bar magnifier actually allows us to look at a lower time frame to get the high open close values. If you're looking for a trading strategy maybe on multiple time frames or something like that, that just makes it a little bit extraordinary, or you're trying to execute trades in a candle, you may find that actually helps you because it's getting price data from a lower time frame. Currently, I don't activate that really on many of my strategies, only for the back testing because we always use the open of the candle in DaviddTech strategies just to make sure that we're actually using the data, and that's something that I call kind of my data cleaning process. If you try and get in the middle of a candle, TradingView will never ever know where it is because they don't actually have that data. So that's where we segue over to more information about the problems of using the back tester and things like that. So you've added your strategy. What is next? We have our optimization. Now I did do a video about optimization on Wednesday this week. I'll put the link to it down in the description below. Won't be going through the full optimization process that I have because I did it in that video and I don't want to bore everybody. But what is actually optimizing? Optimization is the fine tuning of a trading strategy using the lengths and things like that of a trading strategy. The inputs that you see on TradingView, when you go over here, you click the cog button, you press inputs here. It goes through all of these. Well, you can go through all of these and change them all and fine tune the trading strategy to the current market that you're on. Now, obviously that has its own pitfalls, but we'll be talking about them in a while. So that is what optimization is. It's a long process, but is well worth it. In simple terms, for example, if you have an RSI on your chart and you want to change the length from 7 to 14 and then 15 and then back test it, that is optimizing the RSI length to find the best length for the current market that you're on. But like I said, they all come up with their own pitfalls, one of them being overfitting, which is something that we're going to go through and talk about in a couple of minutes. But yeah, you need to have a plan. You need to have a plan for your trading, for your optimization. And as I said earlier, this is the kind of the plan I went through on my YouTube video earlier this week. But you do need to define a couple of things in your plan. The most important, I believe, is when to stop, because you could optimize until you overfit. That was this slide back here. Overfitting, I'll be going through what it is, but in a nutshell, it really is just fitting your strategy to historical data. And then when you put it on live trading, it absolutely fails. You need to define your objectives when putting a plan in together. Defining your objective would be something like a minimum amount of win rate. If you're a trader that likes to rely on a high win rate trading strategy, write it down, make it part of your plan. Don't trade something that you'll feel absolutely awful with. If it's got a 40% win rate and you're 6 in losses in, and you just feel as though you can't stomach it anymore, and you're going to turn that trading strategy off, and it will or might reverse, and that's when you start biting yourself. Oh, yeah, you know what I mean. Kicking yourself. That's when you'll start kicking yourself. I couldn't remember the expression. You've got to know what you're trading. Obviously, these are things, most of them that are pretty obvious. But yeah, obviously know what you're trading, your risk management parameters or idea behind what you'd like. What would be something that you'd feel comfortable with as a take profit? Would you be more comfortable with lots of trades with very small stop losses, or maybe a few number of trades with a bigger stop loss? Would you prefer being in and out of the market as quick as possible, maybe with a low risk to reward where you've got a high win rate? Those kind of things are important to know before. Understand what max drawdown is. I'm going to go through it in a second because it's important to understand what it is and understand how much you personally feel as though you would be happy to lose out of your account before maybe the trading strategy reverses, because it's important to understand the worst case scenarios. Your trading frequency, as I said earlier, what kind of trader you are, a scalper, day trader, and rules for giving up. Like I said, when it goes past that actual point of no return, turn it off before it is too late. Because turning off a strategy is a very important part of your plan. Knowing when to turn it off is something that is a very hard decision, and people take it lightly and turn bots on and off, and that really is a plan for failure. I've done it plenty of times, did it when I was clients of other platforms as well, turning the bots on and off as I was panicking and also FOMOing in. Obviously, you need to have it written down when you feel as though that the trading strategy is failing and not going to plan, and when to turn off the trading strategy. Obviously, my plan is not what everybody agrees with, which is absolutely fine. I'm here to learn as well from you guys. I'd love to know what your ideas of optimization are. Do you think it's a good idea to optimize everything or small parts of the trading strategy? I'd love to know your ideas and thoughts down in the comments below. Doesn't have to be TradingView. This is where I got a bit lost in my slide here. Sorry about that, guys. Yeah, so TradingView doesn't have its own optimization, which obviously means it's game over for us all. We can go back home and give up on algo trading. Not at all. This is where we, as a community at DaviddTech and the community behind Discord, have come up and built the Optimiser, a bot that optimizes trading strategies for you. It's this little guy up in the corner up here that you can add to your trading strategies. Literally go over to Google and type the Optimiser by TradingView and you'll be able to find it here. There's 8,000 members. It has 84 reviews. You can add it to your TradingView, and like I said, I will put a link to the video about optimization down in the description below. Really, I believe is probably one of the best optimizers out there, and probably about the only one that has so many features. So yeah, it's free. You can download it for free. You can use it for free. There is no paid plans. You can use it on any strategy. It doesn't have to be a DaviddTech strategy. Use it till your heart's content. Hope that you'll give it a nice review as well while you're there. Let's have a very quick look at how the optimizer works. First of all, go to Google, as I said earlier. It's always the first result up the top. This is how I optimize my trading strategies. I'm going to go fly through the plan very, very quickly so you understand. Hopefully, like I said, I've already done a full video on this. So the first thing that I'll do when optimizing is I'll go over to the DaviddTech boilerplate and set all of the default values pretty much to 0. So I'd remove things like the message here and add the optimizer mode. It just makes the DaviddTech strategies a little bit faster for loading by removing all graphical interfaces off of the trading view. And then I'm going to go down and I'm going to set my stop loss and take profits to ATR and risk to reward of 1 to 1.5, just like this. That's going to give me a good feeling of whether the strategy is actually going to work or not on 1.5, and then we could go back and play around with these a bit later. I'm then going to go down and I'm going to remove anything that's turned on, like trailing stop losses and things like this. All of this risk management I will turn off until we get to this area here, which is the leverage and position sizing. I'll turn off dynamic leverage. I will set percentage of portfolio to 10% and leverage to 10. And then we're going to remove the dynamic leverage. I'm going to block all trades if the liquidation line is below the SL. This is very, very important in DaviddTech strategies. Position sizing I will set to manual. I'm going to keep scrolling down here. I'm going to set the minimum take profit to 0.7 in general. And I will do our max stop loss to 5% whilst optimizing, but obviously I will try and reduce that as much as possible before actually launching a trading strategy. I will go down and continue down, removing things as I go along. I will leave this, but sometimes I set this to enable to 10. Maximum trades in one row means that it will take 10 max longs in a row if it's set to 10. And then it will we'll pause the bot until it starts taking shorts. The other way around as well, obviously. I will leave the main settings of the trading strategy as they are, as that is the main part that I'm going to be optimizing first of all. And then I'll come down here and I'll scroll all the way to the days of the month. Generally, I will turn Saturday and Sunday off as they're trading days that I don't like to trade myself. There's not enough volume or volatility in the market in general on the weekends. Things tend to dump on the Sunday or pump on the Sunday, which kind of falsifies the results. So I kind of remove the Saturday and Sunday in most of my trading strategies. I'll ensure that we are not filtered by backtesting. I'll leave these as is and then I will press OK and we will continue to optimize. This is where I go over to my optimizer over here. I set these to net profit of all. Generally, I will add minimum closed trades, so more than 100, because I generally would like 100 closed trades at least. I will then go over to deep backtesting as I have deep backtesting available and set this date to as early as it possibly can go and set the end date to today's date. Going back over here, I will then go over and set method to annealing. Annealing is the bath situation. We're going to be pumping up the hot water to the hottest as we go, and then we're going to be adding cold water to find the absolutely perfect temperature. That's how I explain annealing. Like I said, there's a video about the whole of the optimizer in the video. I'm then going to press test strategy over here. It's going to go through all the values and pick them up and work out a kind of a plan for our optimization. Okay, the first thing that I'm going to do is deactivate all of these buttons here by pressing activate twice up here. This is going to deactivate everything. Now, everything between the main strategy here, I'm going to go down and find the main strategy settings, which are around this area here. I'm going to select the ones that I actually want to optimize. Like I said earlier, this actually could have been done with a refresh, but I'm actually going to be only optimizing the main settings here and here. Now, there was a little bit of a, not really a bug, but it does actually order them by thingy. If you clear and then press test strategy again, it will actually put them in order, which makes more sense. So I'm going to do it again because I'd like to explain what I'm doing correctly. In the meantime, a little glass of water. Okay, that's better. We're now in order as we are on the strategy. I'm going to now activate and deactivate, and I'm going to scroll down and I'm going to go all the way to the main part of the strategy here. I'm going to be optimizing mainly the lengths because I've already got everything turned on as I should. The length of the T3, the factor of the T3. I explained all of this in the other video. I'll let you go and watch that other video about these here. I'm going to choose the things that I actually want to optimize, like this here, and then I'm going to set our maximum cycles to 1000, and I'm just going to leave it to run overnight, and I'm going to get up in the morning and hopefully it would have optimized and found the best trading strategy. That should give you a equity curve that looks something maybe like this, or probably better on deep backtesting. It will also download an Excel spreadsheet, which you'll be able to find on your computer. I'll probably do a video about how to upload that Excel spreadsheet because it's quite useful. If you go here very quickly, you can see these two buttons here where you can download and upload settings. Pretty useful if you're if you ask me, for uploading other people's settings, but not only that, downloading your own settings and having them stored somewhere. You can put little notes on it, and then you can upload them later if you want to backtest them or whatever. So that is a high-end overview of how to optimize. Optimization is fun and I enjoy it. I spend a lot of time optimizing personally myself. It's a passion of mine and a passion of a couple of members in the Discord. I always go to bed at night time and have at least one trading strategy optimizing in the background. The other options we have for optimization is OPS, what I call OPS, which is other people's settings. You can go through Discord or anywhere else that you can find other people's settings, and YouTube videos, like I said earlier. There's gold mines. There's also that PDF website that I shared earlier, which is the Scholar website from Google. You'll be able to find settings there that other people have come up with for backtesting. But I personally find that the DaviddTech Discord is probably the best place for doing it. We're all collaborating, working together in a subgroup called the Elite Backtesters to find the best settings. We're building tools, and yeah, we really are doing our absolute best job as a community to try and build the best tools to optimize and also to find the best settings. Like I said, it's simply the best place to find the best settings. You can come over to Discord and you can go through through other people's settings, and we've put them all on a website called DaviddTech.com, which allows you to click on any one of these strategies just here. And you'll be able to click on the buttons to go on the side here. This will allow you to either download the CSV file with all of the settings on it, or you'll be able to copy the TradingView chart by just clicking here and clicking on copy up here. If that isn't like a gold mine of like great settings, I mean, there's 500 while I'm on here, 500 strategies actually on the DaviddTech website. It really is the power of collaboration. I'm so proud of this part of our community. We're doing such a fantastic job working together. We do live streams with Vlad every Tuesday on YouTube, going through every single one of those strategies on the main channel here. We're also collecting kind of a prize pool by charging for entry to anybody who hasn't got time or just doesn't want to put in their time to finding their own settings. We're building a prize pool, and currently we've given away $25,000 in prize pools to anybody that's participating in the group. So currently it's around $2,500 every month. We started at $700. We're currently at $2,500, and it's quarterly prizes as well, which are not even included in that. So yeah, come and join us. The Elite Backtesters really is the best part of our Discord. You just have to go over to discord.com, download Discord, and then you can go join our group. It's discord.gg/DaviddTech. That will open our actual room. If you scroll down to the Elite Backtesters, you'll be given an explanation of what the Elite Backtesters are, what to expect, and then you can click this green button here by filling out your email address and just saying that you won't cheat. You will be able to get access to the wonderful Elite Backtesters in the Elite Backtester room. And not only that, you'll get access to a smaller number of the DaviddTech strategies and our settings. You also get access to a load more tools and some exclusive tools to the Elite Backtester group. Once you've submitted your trading settings for any DaviddTech strategy or any strategy that you find on TradingView, you will get access to everybody else's settings and some exclusive bots and some exclusive prizes. So yeah, it really is worth joining that. There's also like Excel spreadsheets, which is a mine of information, hundreds and hundreds of trading strategies. Really is the best place in the DaviddTech to be. So yeah, come and join us, guys. I think that is really worth it. So we've been through the Optimiser. Now you have a sense of understanding what the Optimiser is and how to optimize a trading strategy. Let's have a quick look at backtesting and understanding the backtester. Backtester is part of TradingView. Dependent on your package, you get a certain amount of data or not. Some have the deep backtesting. Let's go and have a look at our new best friend forever, as it's written now, BFF. Sorry, the best friend forever is our new backtesting tool, but don't let it betray you. As it says it here, don't always add fees. Sorry, do always add fees. If you include fees, it's helping you to keep the edge on your side. You've got to remember that the fees are the things that are paying for the exchanges and things like that. That's giving them an edge on you, because any 50% trading strategy that's hasn't got fees and has a 50% win rate might look profitable, but with fees may not. Now that was a bad way of explaining it, but please include your fees. Also include slippage. Slippage is created by limit and market aggressive orders. When you put in a market order, you're going to go to the closest level on the order book, which creates what we call slippage. So what is written on TradingView as your entry may not be what you got as a price. The only way that we can actually estimate this is to add slippage to our TradingView backtest. You're going to estimate the amount and it's going to backtest it with that slippage on every single trade. A lot of people have different ways of adding slippage. You can either add slippage to a certain number of trades, all trades. I think the only way really to do it on TradingView is to actually do all trades. You can build your own way of backtesting and add it to a certain number of trades, not all trades, because that kind of is the way that the market would actually work. I would always put a little bit too much slippage on there, just to, as with fees and everything else, go for the worst possible situation, because you might be surprised when you actually launch a trading strategy on real markets. Other tips for the backtesting tool: don't use high Kanashi candles, as I said earlier. TradingView only has access to the open, close, high and low candles. When creating signals, when you start putting things like high Kanashi candles on there, you're actually putting the formula into those high, low, open, close, which actually skews your results and gives you probably much better backtesting results than they actually will ever be. When you get an entry on a high Kanashi candle, it may be, I'm trying to put my finger so you can see it. When you're getting a entry on a higher Kanashi candle, you're actually your high Kanashi candle will be way up here, and actually your candle may be a lot lower. So the entry would be a lot lower than what you're getting, or the other way around. There's power of collaboration. So yeah, once again, guys, come and collaborate with us. Come and work with the elite backtesters. This is what you could expect from the backtesting results. I'm going to go through and go through the actual backtester, the strategy backtester on TradingView, and explain some of these sort of stats that are extremely important. A lot of people just look for win rate and things like that. It's a mine of information, guys. It really is important to understand. So let's go over to TradingView to get the deep backtest. No, sorry, the backtester, the strategy tester. You have to use a strategy from TradingView. So when adding something from trending, for example, you have to look for this little tiny icon just here. If you have this little icon, this means that this is a strategy and not a indicator. The rest are indicators, and my point of view really is that if they're not in a strategy, they are probably useless, just making your chart look like a Christmas tree. No disrespect to anybody who builds indicators. I think that generally, if you're looking to trade, you should be building a strategy, not just an indicator. Okay, so this is our back tester. It's back testing strategy. Our strategy here, we have a couple of tabs. We have overview, which gives us our equity curve, and all of these probably most important stats. I should imagine that's probably why TradingView has put them there. You get the equity curve. You get to see what the equity curve looks like. We go over to performance summary. We get even more information from the performance summary here, and TradingView has kindly put the export data button back here, which is great. Thanks TradingView. They removed that for a bit, which now is added back on. So we have that added. We have even more information here, like things like the net profit. We have our gross loss, gross profit, our max drawdown, which is also on the overview panel as well. We have the buy and hold return, Sharpe ratio, Sortino ratio, profit factor, and a lot more information that you just get on this overview panel here. We have a list of trades, which is very important to look through. You get to be able to see which trades may or may not look correct to you. I suggest if you find a trading strategy, just to scroll through them and have a bit of a deeper look into each and every trade. Then you have your properties for every single part of your trading strategy, the date range, symbol it's on, the inputs, and all of that kind of thing. I tend to download these just in case you lose it, so you can come back and find it a bit later. So let's have a look at the overview and some of the results on the overview. The first one we're going to be looking at is win rate. Now, win rate is called percent profitability on TradingView. As you can see here, this gives us a percentage of wins in comparison to losses. So we have 59% wins in comparison to losses. It's pretty simple, really. Probably the most understood and the everything that everybody looks for as a trading strategy. Everybody wants a 90% win rate. But I'm not going to go into what I think of 90% win rate strategies. Any strategy in my eyes could work on any sort of win rate. Just depends on how you as a trader. So very important, very good for also you're looking in the future for overfitting and things like that. If you have a trading strategy that you're running on a forward test, so on live trades, this could be one of the indicators that tells you should turn off your trading strategy if the win rate is considerably lower than expected. Next on our list is closed trades. Obviously, we're going to go through the ones that are the most obvious. First, closed trades is this one here, gives us the number of closed trades, not the number of trades taken, but the number of closed trades. Do remember that you can actually pyramid trading. So you go here and set up pyramid trading. So you could have 6 trades in a row. 6 trades could still be open, even if it says there are 749 closed trades. There may still be open trades. These are fully closed trades. Next one is profit factor. Now I'm going to read through these as definitions. The profit factor is the ratio of gross profit to loss profit. The formula is gross profit divided by gross losses. Indicates how much profit is earned for every dollar lost. I don't think that everybody understands this. I think it's extremely important, the profit factor. I generally try to look for a trading strategy that has a profit factor getting close to 2, which means that if I have $100, if I'm losing $50, means that I could potentially hope for $100 if I have a profit factor of 2. I think it's very important. I think that the higher the profit factor is great. If the profit factor is above 1, generally means that the trading strategy is profitable, but doesn't mean it's a good trading strategy, just a factor to take into account. Then we have max drawdown. Max drawdown is the max losses between 2 peaks in the trading strategy. I don't know if I've got a good example here. I haven't really got a great example here. Between 2 peaks in a trading strategy is the lowest point. So when a trading strategy makes a new higher high, the lowest point between those two peaks is what we have here, which is the max drawdown. Max drawdown of 36% can be extremely hard to swallow. Like I keep saying, we are on a leverage trading strategy here, so you do have to be careful. This, if we took much lower down on leverage, would obviously take our max drawdown down, but yeah, 36%, 36.59% is very hard to swallow. Imagine losing 36% on your portfolio if you're trading your full portfolio. Would be extremely hard to swallow. Most traders on aggressive traders that I know, including myself, look for trading strategies that have a max drawdown of below 20%. If you're conservative in your trading, maybe you'd like it to be lower than 10%, which I totally understand. Obviously that's going to affect your net profit and things like that, but maybe diversification is better for that example. Sharpe ratio is the measure of performance of an investment compared to a risk-free asset after adjusting its risk. The formula is return takeaway risk-free rate divided by standard deviation. The idea of this is to see whether your strategy is a smart investment decision against an excessive risk. Yeah, Sharpe ratio for me is something that I kind of less optimize for nowadays. It's very important, but I do tend to think if you only optimize for the Sharpe ratio, you tend to over optimize. The general rule is to try and find a Sharpe ratio above 1, but that doesn't mean that you shouldn't be trading, or I shouldn't be trading a strategy that has a Sharpe ratio lower than 1, because by continually optimizing that strategy to get a higher Sharpe ratio, you may end up completely overfitted, which really defeats the object of optimization. A better ratio would be Sortino ratio. A lot of the algo traders that I know, including myself, put more weight on Sortino ratio. I spent a lot of time on Sharpe ratio. The only difference between Sharpe ratio and Sortino ratio is that Sortino ratio only takes or focuses on downside risk. The formula behind it is return take away the risk-free rate divided by downside deviation. Sorry, it gives probably a better measurement than the Sharpe ratio, because it's only actually taken into account the harmful volatility downside risk, as it says on the screen there. To find this in TradingView, click on performance summary. You'll find the Sortino ratio just there. Depending on your strategy, a lot of people look for over 5 for a good strategy. But like with the Sharpe ratio, don't over optimize. It's going to be your worst enemy. Take your strategy, build it upon other things like your win rate and things like that. If the Sharpe ratio and Sortino ratio look okay or good, put it into forward testing, which we're going to discuss afterwards. And maybe you'll be better surprised than if you just over optimized until you come up with the Sharpe ratio. I've fallen into the trap plenty of times, built plenty of strategies where there's a Sharpe ratio of over 1, you put it on live markets, and because I've over optimized to try and get that 1, you get a strategy that just falls apart and is no good whatsoever. Moving on, the deep back test, which, if you're serious about trading and algo trading, is an absolute no-brainer for me. If you can afford the upgrade on TradingView, I certainly would. Gives you more data. So the deep back testing is the actual difference of being able to back test all the way back to 2023 with just the standard like back test like this. This will go up to December 2023. We're currently in 2024 June at the moment. If you deep backtest, you can go back as far as data can take you. Currently, on the current pair that we are on, we can go back all the way back to 2020, March 2020. So as you can see, you get a much better overview of your trading strategy on those periods. You can also sort of play around with these dates and do a walk forward test as well if you know how to do that. Maybe something we'll look at a bit later as well. So if you can and you can afford it and you're serious about trading, I certainly would invest the money in to get this feature here. It allows you to backtest much further and is a no-brainer for me. So that was a quick overview of the deep backtester. We do have a couple of words of warning, or I have a couple of words of warning when deep backtesting or backtesting in general. 80% of your strategies will absolutely fail no matter whether the backtest looks great or not. So please don't be disheartened by it. It's just the way it is. You will over optimize. You will get strategies that have look ahead bias in them without even realizing, or repainting without really even realizing. You will get a lot that will fail just because they no longer are adapted to the market. You also have to remember that a strategy isn't for life. As far as I know, isn't for life. They will fail eventually. Each strategy will eventually fail. That's why diversification is extremely important when you're building trading strategies. Overfitting is a huge problem as algo trading. I've been through it a couple of times in this video or this stream. Overfitting is something that we all have to deal with as traders, as algo traders. Overfitting occurs when you're fitting data too closely to points and events inside of historical data. For example, you're building a strategy on I don't know, Euro USD, and you're back testing it for the full period all the way from the beginning up until today with RSI lengths, and you're putting that RSI length to 7.5 because it looks absolutely brilliant on the back test, but that length causes in real time trading to actually fail because maybe it never ever reaches an oversold or an overbought period ever again, because in real markets those rules are just too strict. Maybe moving the oversold or the overbought values to a higher or lower amount would even more overfit and make that strategy really strict, and those kind of levels will never happen again. Happened in history, will not happen in real life situations. But please also don't be disheartened by this, because overfitting happens to everyone. I overfit, everybody in the Discord overfits. It's just part of algo trading. It's kind of you have to throw as many ideas as you possibly can at a wall to see what sticks. This is the same with overfitting. Eventually you get to a point in algo trading where you realize that 80% of your trading strategies will not work. So why not just forward test as many as you possibly can and leave them to run on real trading sort of simulators or whatever it is. We'll go through that as well in the future. But yeah, it is something that you have to deal with. I personally, like I said, have 80% of my trading strategies absolutely fail, but you don't need that many to actually run profitably to become a profitable trading trader. So deal with it, get over it. It is the way it is. I overfit, everybody overfits. Don't worry about it. If you don't start to optimize and you worry about overfitting, repainting, all of these kind of things, and you never ever start to optimize and try and find that trading strategy, you'll never become an algo trader because you would never have started. Things to help you stop overfitting: don't over optimize, which is obviously easier said than done because you never really know when you've over optimized. Try to stick to your plan. If it doesn't work, just stop optimizing, give it up. I know that there's things I went through personally, a period where I was looking for a smart money concepts trading strategy and desperately wanted one. I optimized for months on end, and it was totally a waste of my time. Never found anything, and the ones that I did just failed on real markets. You don't also need to optimize every single input in there. Stick to your plan. If your plan is to optimize only the middle or only the main settings of the strategy, only optimize them. Don't go away and optimize ADX levels and goodness knows what else just to get that best results. Manually optimizing a trading strategy at the end or at the beginning always helps you to understand what the trading strategy is, how it works, what changes the profit equity curve. Sorry, what changes the equity curve in what kind of manner. I go through all of my trading strategies and optimize them manually first for at least half an hour to an hour, so I can get a real good feeling for the strategy and understand really how it is affected, how the equity curve is affected by every single parameter of my trading strategy. It is long and laborious, but obviously in the long run, guys, this is the financial freedom, so it's actually really worth it. Put the time in and you will you won't regret it later. Well, not financial advice, but I certainly don't regret it myself. Test on other pairs, on other exchanges. A great way to work out if something's overfitted is take something from one exchange to another or one broker to another with the same pair, see how it reacts. Obviously, every broker, so some markets are correlated and work together and are exactly or pretty much exactly the same. The volume on one chart is the same to another. If you go over to things like crypto, they're different on each exchange. When you're on one exchange, the candles could be completely different to another exchange or slightly different to another exchange. So moving that strategy from one exchange to another allows you to test how your trading strategy would work on those exchanges, and is absolutely a brilliant way to, in its own way, forward test, also to see how it would react on different exchanges, and also check for overfitting. There is also, as I just said, the in sample and out of sample testing. In and out of sample testing is taking a full data set. So from the very beginning 2020, as I showed you earlier on the pair that we were looking at earlier, going all the way back from 2020 up to today's date, dividing that data set into certain amounts, optimizing on one amount of data, and then walking over and just literally taking that strategy and testing it on that other part. That allows you to test very much like moving from one exchange to another onto data that the actual strategy has never seen before, meaning you're kind of blind testing the strategy to see whether it will work on different market conditions. It's an absolutely brilliant way of walking forward and testing those strategies for overfitting, and something that I regularly do and preach, and hopefully will integrate into my future tools as we go along, because I think it's essential and very important to understand how to in and out of sample test, and not only test but do it correctly. This is an explanation of how to in and out of sample test. Like I said earlier, we're splitting data from 2002 to 2016, and you can split it in lots of different ways to try and optimize. The Optimiser has a tool for doing this, but I'm not going to go into that today. This is a bit more of an advanced technique. I'll do a video about it on Discord. We also have robustness testing. Alternative methods are Monte Carlo testing, your trading strategy to say how it would react on a full Monte Carlo test. Bringing randomness into the situation to show you how the strategy would work if you had X number of wins in a row, etc, etc. Using something like winrate.io to see how your trading strategy would work on different leverage levels and things like that. And most importantly, putting your trading strategy through an incubation period, which I think is absolutely essential to every single trading plan as an algo trader. So you've got your trading strategy on to TradingView, you've got an optimized results. What is next? Are we in the money? Unfortunately, we're not quite there. No, we got not only to backtest trading strategies, but we have to forward test them as well. So this is where we go into the incubation part of our plan, the Botify plan. Incubation is taking the strategy and taking it through a forward test, so a live trading test without actually having to spend any real cash or very small amount of money. Kind of fake it until you make it, if you will. You're testing it on a, like I said, on a maybe on a live exchange like with a very small part of your portfolio, something that is disposable and don't care about income, something that you're ready to lose just for the testing of trading strategy. Now, I spent many years testing strategies just like this. I had $1,000 or whatever it was set aside just for testing trading strategies every month, and I realized that most of that money I would have lost every month just on testing. It's an investment. It's a bit like having a business or whatever it is. You have to invest in these strategies to make sure they're working. Obviously there are other ways, and just as reliable ways, which I'm going to go through next. So the other ways with their pros and their cons is to leave your chart on TradingView open and come back after a couple of months to that chart. Obviously the pros of that is that you're not adding any extra expenses to your trading setup. You're already paying for TradingView, so it makes no difference to your income or whatever, or your outgoings. The big problem is losing that chart after 3 months of full incubation period. If you lose that chart, it's gone forever. If you're not particularly well organized, like I can be sometimes, it's not a criticism, but we've all got day jobs, things to do, we've got families and things like that. It's easy to lose things. If you lose a chart and can't come back to it, you could lose all of that data that you've managed to put together. Paper trading or testnets are a wonderful way of testing. There's a couple of pros and cons to that. One, obviously, as with TradingView, there's no extra cost to using a testnet. Testnet is, if you don't know what it is a testing environment on the exchanges. A lot of them have them. They allowed you to trade with paper trading money to see whether your trading strategy would work. It really is a great way of doing things. There is a couple of cons to it. One is the liquidity on a paper trading account or a testnet account is a lot different to what it would be on a real trading account. Slippage and things like that are not really a thing on testnets, and they're different. They're different to what they are on real trading accounts. Manually writing down trades is similar problems to TradingView and just leaving it open. If you just leave them open, the problem is when coming back to a written down trade, being organized is extremely important. I really believe in trading journals and all of those kind of things, but obviously we're going to be talking about a month to 3 months a period here for the incubation period, dependent on your time frame of the trading strategy, number of trades, and your trading plan on how you get back to them. The other way is through DaviddTech.com, which is my website, believe it or not, which allows you to create sheets like this here. You can put your trading strategy on here. Currently this is only in beta, but you can actually see and send your results to me, Vlad, or William on Discord, and we'll quite happily add it for you with no problem whatsoever. So you get to see a trading journal. This is when this was submitted. It was submitted on the 21st of May. And we are currently the 27th of June, and as you can see by sliding this back here, you can see how much extra net profit this has made. You can see the win rate, how it's changed, the number of closed trades, and all of that good stuff in one single place. You can see monthly how much the trading strategy would have won. You can see the equity curve of incubation. You can see also the 7-day, 30-day, and 90-day profit in percentage. You can see every single one of the trades in a table, which you can scroll through. By scrolling through and going all the way back, you can find the white trades, which is back testing, and the yellow trades is the actual forward testing. You've got even the performance data. Everything's taken from TradingView so that we can actually see how this trading strategy is performing on live markets. So I think this is probably the best way. You can build your own system or become part of the DaviddTech community. This system here took me a couple of weeks to build, if not more, but there's no reason that you can't do it yourself, or you can just become part of our community and get access to everybody else's strategies as well. And that's a quick screenshot of what I just went through. So why do we forward test? As I explained earlier, forward testing is essential because when you put a trading strategy onto back testing, the equity curve could look like this up to the blue line here. could look absolutely fantastic, but as soon as we take it out of that historical sort of prefetched data kind of situation where we can overfit, when you put it onto live trading, look, this strategy absolutely fell apart. And this is a real strategy that we actually tested. It's not just for show sakes. Actually really did do this, so I should imagine that 27% was around there. It took a new low. He's not saying that it hasn't made a new high since, but who wants to go through that? It was just the way it is. So forward testing is essential. We need to forward test the strategies. So great, you have trading strategies up and running. You have back tested, forward tested for a period that you've set in advance. It's not something that I covered, but generally when you set a period of forward testing, you generally have to try and set in your trading plan how long you want to, or number of trades you'd like to see before you actually trade that trading strategy on a live market. Then I go away and then I trade it on a very small amount after the incubation period, just to see if it really is working. So once you've done the full incubation period, we're moving on to the fuse part of our Botify plan, which is connecting to bots and actually trading the strategy on live markets. But TradingView unfortunately doesn't have any direct connections to any exchanges, so we have to give up and go home. No, of course, DaviddTech bots actually has a way of connecting all of these strategies. I'm going to go show you very quickly how to connect to the DaviddTech bots, but on Wednesday this week I'm going to be doing a full overview on how to set up simple bots, advanced bots, trading bots, all of those kind of things, signals over to your Telegram and everything you wish for on DaviddTech and Trigger Trade. That will be posted on YouTube, very much like the Optimiser course. So let's have a look very quickly at the DaviddTech website here. If I go over to DaviddTech here, if we choose a strategy that's particularly interesting to us, the first thing we need to do is go over to exchanges over here. We're going to add the exchange that's interesting to us to our bots. It's very simple. Click your exchange over here and you put your API codes and secrets here. Like I said, I will be doing a full video on how to set this up on Wednesday next week, or maybe Monday next week. We'll see. It'll be next week, that's for certain. Add your exchange here with your API codes. By pricking add exchange here, you'll come up with a success. If there's a problem, it will tell you there's a problem. We then go over to copy bots and we find a strategy that's interesting to us. Now, a lot of people have come up with ways of searching. You can search here by adding your filters and things like that. I'm just going to choose any one today just to show you guys how potentially we can set this up. So I've looked at this wonderful strategy by one of the members from our trading community, Shibuku. As you can see, it looks absolutely brilliant as an equity curve. It's been trading for around a month, so we'll probably leave this one a little bit longer, but I've decided that I'm going to set this one up with bots on DaviddTech. So we can click here on this yellow button here, copy bot, which allows us to copy it directly over to our exchange. Any signals sent to this trading strategy will all be automatically activated on my exchange without even a couple of clicks or anything like that, without any alerts from TradingView, just by the website doing everything for me. So we're going to give a name to the actual strategy. I'm going to call this one test. We're going to choose our exchange from the list here. We have quite a few exchanges that you can access. If I click here, you can see that we have a couple of exchanges. We're adding more as we go along. A lot of them are still in beta test, but we have all of these exchanges here, as you can see, for DaviddTech. If you'd like to become part of the beta testers, just send us an email and you can get access to any of the ones that are not available on the website yet. We're going to choose whether we're going to be using cross margin or isolated margin. Just fix it out with the exchange that you've selected. We're then going to choose our leverage. Now, the leverage dynamic or static means that if you click dynamic, it's going to use the leverage used inside of the exchange. The reason we've set this up is if you click on the cog on a strategy just here, go over to inputs, we have something called dynamic leverage in the DaviddTech strategies here, which I currently am looking for. There you go. So you have leverage set to 1, but we have a maximum leverage of 25. So you can see the current trade is actually running at a leverage of 11. The strategy, what it does is it adapts the best possible leverage amount using an algorithm for us to take a maximum amount of leverage, meaning that it will never go above 25 because we set the threshold to 25. But it really is quite powerful, but also very risky. So be very careful with that tool there. So you can use either dynamic leverage or set your own static leverage here. Let's say that we want to set it to 11. Then we can use a percentage or a USDT amount. If you use percentage, that means that you'll be using a percentage of your full portfolio on TradingView. Do remember, on your exchange. Do remember to put it over to your trading wallet on the actual exchange. USDT amount, we're going to put 100. Now that means the maximum USDT amount would be 100. You can set a stop loss and take profit if you wish. Press that for read the terms and conditions. Press save. And that will add that actual strategy to your TradingView, to your exchange. I keep saying TradingView, guys, getting a bit late here. So yeah, we'll add it to your exchange and you're auto trading that trading strategy. Now, obviously, there are only the strategies that have been sent to me, Vlad and William, via Discord that are actually on the website. If you're looking to build your own strategy or use a DaviddTech strategy that isn't on this list, we have plenty of other ways using Trigger Trade and the advanced and simple bots from DaviddTech. But I'm going to be going through those, like I said, in a video in the next couple of days. So I'm going to leave that until the next day, but that is our final step before coming back and having a look at our strategy settings after a couple of days, or just following and actively following our trading strategy to make sure it's going in the right direction. Guys, just very quickly, also there is lots of courses on DaviddTech.com. They're all free of charge, 30-day courses. There's optimization course and all of those kind of things. There's loads of coupons for free on DaviddTech.com, so don't miss out on that as well if you're looking to look a little bit further into how to optimize correctly or my methods of optimization. Inside Discord, there's also some absolutely fantastic PDFs about how to optimize, one written by Igor X, which is absolutely amazing. Love it myself. Some absolutely wonderful members in there, so come and join us on Discord. You can also add all of my trading strategies. The links to them are down in the description below. I'm going to thank you for joining me. This has been a long one, guys, so thank you very much for joining me. Thank you for making it all the way to the end. The bonk giveaway is going to be my last one for this evening. I'm going to give away 1 million bonk to a random comment from my last video. I did also forget to do another one, so we'll do 2 today. Yeah, so we're going to do that before I leave you guys. Okay, we're going to be giving away 1 million bonk to 2 people from this video here. There are 25 comments, so there's a high chance you might win. Let's go. Congratulations to you, you just made 1 million bonk. Please send me or Vlad a message in the comments. Let's give another winner. Let's go. Guys, once a week I'm going to be giving away $500 to the most viewed clip of this video or any video of DaviddTech from this week. Whoever has the most viewed TikTok or YouTube short using this video or the videos from this week, I will send you $500. This is every week and going to be going on throughout the whole of this month and probably for the foreseeable future. You can post as many times as you want. You must tag my TikTok or YouTube username, and you must add DaviddTech in the title and in the description. I look forward to seeing all your clips and I look forward to seeing the winners. So let's give another winner. Let's go. Congratulations to you, you just made 1 million bonk as well. Perfect, that's exactly what I'm going to say before ending. Guys, it's around 2 AM here where I am. Thank you very much for joining me for this video. I hope you managed to pick up a couple of nuggets of wonderful information from the video. If you enjoyed it, please don't forget to give it a good old like. I will be doing a couple of other videos where I deep dive into more information inside of algo trading and how to become a profitable, well, hopefully profitable algo algo trader. Obviously, guys, I'm not a financial advisor, but I'm just sharing my experience here. Don't consider myself an influencer or anything like that in the slightest. Make your own decisions. Certainly don't take any advice from a guy like me or anybody else on the internet. Keep safe, trade like a boss. Bye-bye.
Come on, David, and once again he's gone to code a new strategy. He'll be back in just 5 minutes. RSI and MACD.